Welcome to Explain the Charts, where we break down market data and news to give you an unbiased view of the market. Today, we're focusing on Apple, APL, a tech giant with a significant presence in the global economy. Recent headlines suggest a mixed outlook for Apple, with some analysts predicting significant growth while others maintain a more conservative stance. Let's see what the charts tell us. Here's a look at the daily chart for Apple. We observe a recent price surge, potentially fueled by positive news and strong earnings reports. However, the volume needs to be studied further to determine if the price surge is genuine or influenced by other factors. This is where the hourly chart becomes helpful. The hourly chart of Apple shows smaller price fluctuations and changes in price direction and volume. The hourly chart complements the daily chart by providing additional details about intraday movements, which we can then corroborate with news. Let's examine the 15-minute chart for Apple to zoom in on short-term trends and potential support and resistance levels. This time frame shows very short-term price fluctuations, which are especially important for day traders. By comparing the three charts, we see that the daily chart provides context and shows a larger picture, while the hourly and 15-minute charts show short-term volatility. We're noticing a consistent upward trend in the longer time frames. However, there is some short-term price correction, as expected in any bull market. Let's focus on the period between October 28th and November 15th on the daily chart. This section shows a clear upward trend and can be associated with positive announcements during the past 2 weeks. Further analysis will help determine the trend. Notice how the 1-hour chart shows minor price corrections within this period, indicating short-term consolidation which can reinforce the upward trend. Zooming in on the 15-minute chart for the same period, we can observe the short-term support and resistance levels. The short-term support and resistance levels give a good indicator of the entry and exit points for traders and can give an idea of potential price targets. This requires careful monitoring. In summary, the key price levels to watch for Apple are the recent high near 230 and the support level near 225. An upward break above 230 would strongly suggest a bullish continuation, while a drop below 225 could signal a short-term bearish reversal. However, the probability of these scenarios depends on several factors, such as overall market conditions and any significant news. The likelihood of a bullish continuation increases if we see increased trading volume and further positive news related to Apple's product releases or financial performance. Conversely, negative news or a significant drop in trading volume could weaken the bullish momentum and increase the likelihood of a bearish correction. It's important to also note that the short-term charts are noisy. However, the short-term trends can give good indicators of which way the price will move in the near term. Keep an eye on upcoming Apple events, earnings reports, and any significant industry news that might affect investor sentiment. Any unexpected events could trigger price fluctuations, so traders should always be ready to react.